Welcome back, traders. In this lesson, we're going to talk about how to confirm your liquidity sweep using divergence. So what is SMT divergence? SMT divergence is when you have an inconsistency in two assets that are correlated. Correlated assets usually move simultaneously in an identical fashion, but when one asset lags, that's usually a sign of divergence. So if you have two correlated assets and one of them makes a higher high while the other one makes a lower high, this would be divergence. Same thing inverted. If one of the assets made a lower low while the other one made a higher low, this would be divergence. So here you have two instruments that are correlated, fiber and cable. One made a higher low and the other one made a lower low. So this would be your divergence. Now let's talk about how we can use this information. Okay, so what do we have here? We have Euro USD, and what's in black here, what's in these black and gray candles, this is GBP USD. And usually these two move together. So you can see price made a high, price made a high, price made a low, price made a low, and so on. So the first inconsistency that you can see is this low. You can see that this was a deep retracement. This was a deep retracement. Now here you did not get a deep retracement, but this would not be considered divergence because even though this wasn't a deep retracement, this was still a wick. Now price continues, price makes a high, price makes a high, makes a low, another higher high, higher low, and so on. Now pay attention. Look at this low and look at this low. When price comes back to this low, price tests internally. So price tests internally of this low. But here, price sweeps that low. So now let's mark that up. Price sweeps this low, but price rejects from an extreme order block. So this would be your divergence. So what does this tell us? This lets us know that this is a liquidity sweep when there is an inconsistency. So since these two pairs are supposed to move together, one rejected internally, so one made a higher low and one made a lower low. So when you're trading Euro USD and you look and you see GBP USD did not make a lower low, you can understand that this is not a reversal, or this is not even a sign of reversal. Don't expect price to bounce off this support zone and continue to the downside. What you should expect is for price to sweep that liquidity and continue with the intended direction. So here we have SPX 500, and what correlates with SPX 500 is NAS 100. So in black here you have NAS 100 and this is SPX 500. So what do you have here? Here you have price making a higher high. While here you have price making a lower high. So this is divergence. So what I'm telling you here is that even though a lot of traders can differentiate between a liquidity run and a liquidity sweep, they still have trouble with accuracy. But using SMT divergence, you can improve your probabilities tremendously. So I'm sure now your question is, how can you use this information to get in a trade? And to get in a trade, you need to layer your confirmations. So your first confirmation is your divergence. And your second confirmation will be price action. And this is an example from our previous example, Euro USD. So what you're looking for is, you're looking for what pushed price to grab liquidity. What pushed price to grab this low? And typically it's an order block. This is the last area where orders were injected to break through and grab that liquidity. So this would be the order block. And what you're waiting for is for price to break that level. Why break that level? Because a lot of traders will try to trade the zone. They'll try to take a sell in this supply zone. Here we have the macro and the micro view. And what you want to look for is on the lower time frame, what pushed price to grab liquidity? And in this case, it's this supply. This was the last supply prior to price grabbing liquidity. This is where the last orders were injected. And the reason this works is a lot of traders will try to take a sell there. This is a trap zone. So once price breaks above that zone, you have two options. You can either take a trade upon the break, and this will be confirming your liquidity, or you can wait for this zone to flip So you can wait for a retest and wait for this supply zone to turn into a demand zone and take the retest. So here we have a sweep. And now let's go into lower time frames. Define what push price. So what push price to grab this liquidity? You could look at this supply zone. And if this looks too risky for you, you could look at this supply zone as well. Usually when you have wick overlap, there should be a supply zone on the lower time frame. So actually let's check. Let's go a little bit lower. And here you have a supply zone. So again, what would confirm this sweep? One option is waiting for price to break this supply zone and get an entry here, or wait for price to break the zone and come back and retest. When price retests, this zone instantly becomes a demand zone. So if you would have entered once price broke the zone, you would have been correct. And if you would have waited for price to break and retest, you would have been correct as well. Price broke, tested, and confirmed. So both of your zones that push price to grab this liquidity were correct. So this is our example from earlier. And now let's investigate what happened inside of this liquidity sweep. So this is where the sweep occurred. Now, what pushed price? What pushed price to absorb this liquidity? What pushed price? So as you can see here, you might have to drop lower. But if we can't find anything on the lower time frame, we can look at this demand zone. We can say that this is where orders were injected to push price to grab liquidity. But now let's go lower. On a lower time frame, we have multiple zones. On the lower time frame, we have this zone, and this zone was used. This zone was used here to push price up. So now this means that this rejection left a zone, and this would be the zone. This would be the demand zone that pushed price. So this reaction is a result from this reaction. So what are you waiting for as far as an entry? As far as an entry, you're waiting for price to get below this level. Once price gets below this level, you can take a trade and have your stop loss right here. Or you can wait for price to break out of that zone and retest. And as you can see here, you have your retest. Price broke the zone, retested, and dropped. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and leave a comment. Let us know what lesson do you guys want next.